Morning everybody, doing show over there, DRFX Forex Swing Trading. Today I'm going to take a look at the situation on the Pound USD pair. Basically going to be looking at the daily chart and the 4-hour chart to identify if there are going to be any swing trading opportunities for us over the next couple of days. As well as take a quick look at what's been happening on the 30-minute chart for you day traders out there. Okay, so starting on the daily chart, we can see that the market has actually been moving in a very long and extended sideways pattern since 2008. As you would recall, this large, sharp movement in favor of the US dollar essentially reflected the safe haven flight to safety activity that took place within the context of the 2008 financial crisis. Since then, or rather, that movement and the end of that movement represented the start of this sideways pattern, which today is now, you can see, has taken the form of a large consolidation pennant formation. Connecting these areas here, we can form the resistance boundary, and then connecting the support boundaries, the support points along this area here, we have the corresponding support point to form the pennant setup that we now have here. So what's been happening over the last several days? Now, taking a closer look, we can see that the market actually attempted to break out from the support area here, but pulled back to test and then U-turn at the support boundary here. Now, one would have now, generally speaking, when a consolidation boundary is going to be broken, it can either break out and continue without pulling back, or it can pull back and then U-turn to then resume the breakout. But what we have taking place is that instead of doing either of those two, the market is actually pulled back for a second time and is now actually back inside. And well, it actually pulled back inside and is now just below the support area here. So the fact that we have attempted on 2 occasions to break out and that we're basically essentially back to the support area here would suggest that the market is in the early stages of what we call a false breakout. Generally, it's a situation in which the market breaks out, attempts to break out in one direction, pulls back inside of the consolidation boundary, and then breaks to the other end, breaks out at the other end. So this could be this could be the early stage of that movement that takes us back to the resistance and above for significant gains in favor of the pound. Another supporting technical aspect of this is the fact that we've also broken higher above this downtrend line. So combined with these two false attempts, the break of this downtrend line and the fact that we're essentially back at the support area, all seem to point to the imminent move bullish for this pair over the medium to long term. Let's take a quick look at what's been happening on the, well, let's take a closer look on this pair on the daily chart. Here we can see that this pullback has actually led to the formation of this uptrend line. The market pulled back and we're now at just above this uptrend line and the support boundary of that large consolidation setup. In pulling back, the market is essentially formed what we call a counter trend line barrier. So what this means is that if the market is going to continue higher, it needs to break, it will have to break this barrier here with a strong bullish U-turn, a strong candle, similar to what it did at this area here. On the other hand, if the market is going to once again attempt to break out short from that this larger consolidation, then we could see this uptrend line being broken over the next few days. A third possibility is that the market, instead of breaking higher or attempting to break out short, we could see the market enter into a period of consolidation once again at this area here, moving sideways to form a pennant or range setup, and trading within the boundaries of that setup would also be possible until the market decides what it's going to do over the next several months. In forming this consolidation, the market will either head back inside of the larger consolidation or attempt to break out once again lower in favor of the US dollar to continue that breakout from the larger consolidation. So let's zoom in now on the 4-hour chart to see what has taken place over the last several days. Here we can see that the market actually, there was an inner uptrend line formed at this area here, and what essentially took place was that in pulling back, the market broke this inner uptrend line, gave us a bearish signal to indicate that we would be moving back down to the outer uptrend line. So traders who trade these types of setups against the trend would have been able to capture approximately 200 pips as the market declined to this area here. Now let's take a look at what is the situation on the 30-minute chart for the day traders out there. Here we see that the market actually has been in a sideways movement that led to the formation of this pennant setup with the resistance boundary across those points of resistance and a support boundary formed here. What essentially took place this morning is that the market formed this second support area as it reacted to the minutes of the Bank of England that were released this morning. Essentially, the sentiment coming from the minutes was that the policymakers believed that the economy was gradually going to be eliminating a lot of the slack, which essentially would mean that the economy, the rate of growth and activity in the economy would pick up, and that within a year the possibility existed for them to increase interest rates as a result of the expected increased pressures, inflationary pressures that would accompany the increased economic activity. So as you know, any expectations for interest rate increases would be attractive to persons investing in any, would be dollar positive, would be currency positive for the currency in question. So essentially, this is what led to the positive reaction by the market to this news. Essentially, the market reacted bullish and which led to this rally, the formation of this support area, and the rally that took us to this area here. Now, given the fact that the average daily range of this pair is around 90 pips, 90 to 100 pips, that rally took us very close to that within about 20, call it approximately 54, 8, 54, 80, 54, 77. So we're about 20 pips. It took us within 20 pips of that expected daily range for that pair. So what could take place now is that the market could test the boundary here, U-turn to then carry us back to this area here. On the other hand, we can see that this bearish candle has actually taken out this bullish candle. So we could also be in the early stages of a false breakout that takes us back down to the support boundary and possibly down to the outer uptrend line of that daily chart. So those persons who may have started going bullish may have taken profit, or especially if they entered at this area. But for those who entered late, they may be holding some losses right now. So it is possible that someone could recoup those losses if they were to get in and target anything that might present itself in terms of bullish opportunity that carries us back up to this daily range target here, or if the market shows convincing signs that it's going to head bearish back to this outer uptrend line. So that's the situation on the pound right now. So let's wait over the next few days, and hopefully there will be trading opportunities for us. Take care.